The suicide rate is a very easy way to quantify just how hopeless are the people of a country. And the last time they were this hopeless was the end of the Great Depression. Since 1970, antidepressant prescriptions have increased by 13x, outsourcing our job in globalization and in creating a system where we basically put our youth into ever inescapable debt. Depending on the data that you're looking at, there is an argument to be made that we've actually been living in a silent depression since 2008.
Before we jump into the charts and all the things, is like maybe a little bit how you got started with presenting about Bitcoin, with doing something in Bitcoin, and what you're kind of pointing towards today.
Yeah, so I originally found Bitcoin in 2009 or 2010. In the very beginning, I came across it on an obscure anarchist blog spot, and it sounded really cool, uncensorable money, and it was an interesting thing. The technology side of it, the cryptographic side of it, was kind of interesting. And I don't think I bought my first one for maybe a year or a year and a half, but I was there used to be this Bitcoin faucet. It was just a website where you could go click a button and get some free Bitcoin. I think it was like 2 or 3 or something. And I remember that. And I even mined a little bit. And so this was on my laptop. This was like 2009, 2010, 2011. And I didn't know anything about economics. I didn't know anything about finance, any of that kind of stuff. It was just interesting to me. And I thought it was cool, and interesting. So, and then unfortunately, I didn't really know what I was holding. I didn't really understand what Bitcoin really was, and ended up selling some, I think it was 2013, 2014. And then kind of throughout the 2010s, I was just kind of in and out of it. And this was before I jumped into like economics and macro and all that kind of stuff. So I just had no idea what I was really holding, unfortunately. And, kind of fast forward to 2020, that was really when I started to dive into economics and finance and markets. And that was kind of when I finally started to realize what Bitcoin represented, at least on the kind of economic side, on the money side. But unfortunately, I had sold all of them, throughout the 2010s. And so, yeah, I, had to basically start to kind of reaccumulate, and try to build a stack. Nowhere near what I had. Unfortunately, it's one of my biggest regrets, in my life. I think at the peak, I had like 300 or 400. And so it's a pretty huge regret. But I didn't know what I didn't know. And yeah, since 2020, I've basically just been, trying to learn as much as I can about, economics and markets and, finance and international trade and all this kind of stuff. And now, now that I have done that, I've never been more confident in an investment or a trade. I've never been more confident in a trade than Bitcoin, than I am now. So yeah, my goal is to just try to get back to a small fraction of the stack that I used to have.
What does, before we start with the slides and things, but what does Bitcoin represent for you? Like you said before, you need a long time to get what Bitcoin actually is.
Yes, freedom, I would say, probably, if I had to sum it up in one word. Freedom, but then, the separation of money and state. A lot of people use that as a way to describe what Bitcoin actually does. And I think that that's a super, that would be a really great summary of what makes Bitcoin so important. is that ability to separate money and state.
Interesting. Perfect. And let's start directly in. I think the first thing, as we discussed, would be like, what is the problem? Like, why do we need Bitcoin in the first place? Is kind of the starting point. What are we looking at in this chart? Is this the first one you want to show?
Yeah, this is the first one. So, many people don't know this, but and it's very rarely discussed in kind of mainstream media. But the suicide rate is actually has not been this high since the Great Depression. So this graph shows the suicide rate starting in the early 1900s all the way through to today. The chart cut off at 2022, so I had to add a bar to represent the suicide rate as of 2023, 2024. But as you can see, the last time the suicide rate was this high was actually the Great Depression. Many people don't know this, but it is just one of the many indicators of what I would describe as kind of economic malaise, hopelessness, despair, and the more that I've learned about economics and finance and markets and all that kind of stuff, the more I've dived into all that, the more that you start to realize that kind of everything is downstream from economics and the money obviously being broken. And I think the suicide rate is a very easy way to quantify just how hopeless are the people of a country. And the last time they were this hopeless was the end of the Great Depression. So of course, we're not even in a recession technically, and we're certainly not in an official depression. But something I would point out is that a depression, many people think of a depression as, negative 10% GDP. GDP is contracting at 10%, every year. It's the super sharp, very pronounced economic contraction. But really, what a depression really is just a prolonged period of sub-trend or potential growth. And so arguably, depending on the data that you're looking at, there is an argument to be made that we've actually been living in a silent depression since 2008. And there are some people that talk about this. Jeff Snyder is one of them. And there is data to indicate that. Now it's not, GDP's been growing at, 2% a year. And, jobless claims are not, through the roof. But arguably, if you kind of dig a couple layers deeper, into some of the data, it does indicate that, at least for the kind of bottom, 70% of the country, that they are living in a silent depression. And I think one of the best ways to quantify that is the suicide rate. And so this is why I always mention this particular statistic, is that I think it's a good way to encapsulate just how hopeless people are about not just their current situation, but their future situation. Now this is drug overdose deaths. This is not per capita, per 100,000 people, like the suicide rate graph was. This is just kind of the nominal drug overdose deaths. But I think this is another really good way to quantify, just how hopeless people are. If you're extremely hopeful about the future, and you feel in a strong, healthy economic position, taking 1% of the population that might have genetic predispositions out, just kind of generally speaking, people don't go out and use heroin if they're extremely hopeful about their present situation and their future, the possibilities for their future. So the drug overdose deaths, I think, is another really good way to quantify and see it in a graphical representation. Just how bad the situation is. And this chart shows the rate. So this goes back to the first chart we were looking at, where it shows it per 100,000 people. And it includes alcohol-related, drug-related, and then suicide. And then deaths of despair is basically all three of those combined. And, we see a really obvious break of the trend. The deaths of despair, from the 1900s, they ticked up during the Great Depression, and the 20s. But generally speaking, from the 1900s to about 1960, they were trending down. And of course, they started to ramp back up right around the 1970. Gold was the gold standard was ended in 1971, and we see a kind of notable trend change there. And then really after 2000, it just takes off and it just goes parabolic. And this indicates that something is very deeply wrong. At least the way I look at it, this indicates that something is very deeply wrong with our society, our economic system, however you want to describe it. Something is deeply, deeply wrong and deeply, deeply broken. And I would argue that it's two main issues: the dollar and the reserve currency status of the dollar, and the trade deficit. And they're both very tightly linked. And we'll go into that a little bit more. But the money is simply broken. Of course, the fact that the dollar is a fiat currency, I think, is also deeply problematic. But that kind of paints the picture of the problem. There is something very deeply wrong with our society. And I'm not sure about Europe. I've only, I live in America, so I've only kind of looked at the American data. But I would venture to guess that this general concept is true in Europe as well.
And I would even argue that in general, it's worse in the whole world. It's bad in the USA, but it's even worse outside of the USA, because the USA has the world reserve currency, so they can actually export inflation. They can export some of the devaluation of their own currency to other countries that use the currency. Maybe that's also where you're going with the trade deficit. But it is really interesting for me when you look. Obviously, like, there are things that are outside of America maybe a little better, and maybe a little worse. I heard a lot about Americans complaining about their food supply, the quality of food, and a lot of people, actually a lot of Americans also told me it's way better in Europe, because like Europe is so strict with like what you can put on food and using the pesticides and stuff like that. So a lot of people actually are curious, like, or are noticing that some things are actually better in Europe. But I would argue it's harder to find the things that are better in Europe than they are in America. So like most of the things are actually working better in America, like innovation, like the whole company and startup spirit is way better. The risk appetite for going for big ideas is a little bit bigger and better. And Europe is very, we are trying to regulate everything down into the ground.
Yeah.
So it's interesting to make those comparisons.
Yeah, and I might come across as very critical of America and certainly the current system, but I think it's important to note I am as I've gotten older, I've gotten even more patriotic, and I love America, and there's certainly a lot of great aspects of America and of the system that I think we have the potential to build. And Americans are great people, and the reason that I criticize some of this, get so into some of this stuff and be so critical is because I love my country, and I want to see, I don't want to see deaths of despair of my countrymen looking like a hockey stick, going parabolic. I don't want young people to be so incredibly hopeless that they are gambling on meme coins, trying to catch a 3,000x return because that's the only way they'll be able to afford a house. And it's important to mention, like with that data that we just looked at, the suicides and drug overdose deaths, this mainly applies to men, and young men are I think one of the forgotten groups of people is we've forgotten our young men, and I think being a younger man, I think it's important to point this out because I wasn't able to find a graph of it, but this goes into like prescription antidepressant prescriptions too. We've seen the chart looks very if you were to chart it out, it would look very similar to this particular chart. I think, if memory serves me correct, since 1970, antidepressant prescriptions have increased by 13x. And so, I only say all this stuff because I do care about my country, and I do want it to be better. And I do believe that there is a way to fix all of this. I just hope that, because sometimes when you're really critical of a particular country or a particular area or a particular form of government, people kind of start to pigeonhole you. Right? And I am not, some deranged, communist, capitalism hater kind of thing. It's not that. The only reason that I bring the criticisms that I do is because I love my country and because I believe that we have the potential for so much better, if that makes sense.
That makes absolute sense. And also it shows very much, especially when you look at all those charts from 1971, and there's like this WTF happened in 1971 website where it all kind of also collected. It's really great to see what money does. And solving the money problem actually solves most of the world's problems because it solves incentives and it gives the right structure to it. It's not that if you fix money, you all of a sudden fix depression, but with a sound money, you give the right incentive and the right framework to actually have less depressions, because people can actually build something for themselves and they have sense and they have hope in their life. So that's where the famous saying like "fix the money, fix the world" comes from. I feel like.
Yeah, I agree completely. The more that I've learned, and the more that I've nerded out on macro and all this stuff, the more that you realize that is actually, in fact, the foundation on which, all these other second and third order effects that we see manifesting, really at the end of the day, it all boils down to the money and the economic system. And so this kind of goes into the globalization, the trade deficit. So, after World War II, we were rebuilding Europe. We were largely unscathed. Our industrial capacity, at least, was largely unscathed by World War II, especially relative to Europe's and the rest of the world. And so we were able to basically rebuild the world following World War II. And America was in a very, very strong position. It had accumulated quite a lot of debt during World War II. And I always point out that negative real rates on treasury bonds following World War II, every year, were about negative 15%. So if you bought those war bonds, financial repression, they got you at about negative 15% a year. But we stuck through that financial repression, and we're able to come out of it in a vastly stronger position, especially after we had kind of deleveraged the debt that had accumulated during that period. It was around the kind of the mid 50s where everyone started to want dollars. And this goes on for many years into the 60s and 70s. And basically, we're going around the world and propagating the dollar. Of course, there was demand for dollars, but we also encourage the adoption of the U.S. dollar, and this is what the Eurodollar system represents. And so, unfortunately, as a consequence of some of this, we started running trade deficits. And so it's important just to define what that is. The balance of trade, or the trade deficit, is simply the value of the imports of a country versus the value of the exports of a country. And so, we went from having a trade surplus, meaning we consumed less than we produced. And so we were a net producer. And this principle hopefully makes sense to Bitcoiners. You can't accumulate Bitcoin unless you are a net producer for a value for the world. It's very similar to the trade deficit. You can't run a trade surplus if you are a net consumer or a net debtor. And so what we see here is the dotted red line indicates a perfectly balanced trade, where the U.S. is importing just as much as it's exporting. And what we see is that here, let's see if that's better. Here in the 80s, following the end of the gold standard, the trade deficit starts to widen quite dramatically. And what that meant was that the U.S. was consuming far more than they were producing. And of course, throughout time, this gets worse and worse and worse. And we see that, in the 90s, globalization really took off, right? And the trade deficit widened significantly. And, if you fast forward to today, and this chart is actually not updated with the current data. The balance of trade just came out a week or two ago, and it's at a new record. So you see that lowest point on the purple line, and our current trade deficit is actually lower than that even. And so what that means is that, what we've been doing is we've been, outsourcing all of our good paying jobs in manufacturing, all those jobs that built America and rebuilt the world. We've been gradually outsourcing those jobs to cheaper countries where the cost of production is cheaper, cost of labor is cheaper, in the emerging markets like China, Malaysia, Southeast Asian countries like that. And that's great for some people. And we'll kind of touch on that in the next chart. But just broadly speaking, when you are importing far more than you are exporting, right? You are consuming far more than you are producing. Well, how do you come up with that difference? Well, one of the ways you finance a trade deficit is with a fiscal deficit. And now this is the deficit that most people probably heard about. This represents a government's income versus their spending. And we all know kind of that the US is currently running a pretty insane, close to 7% of GDP deficit, which normally we have only seen during, World War or a really, really steep recession. And of course, we're not in either of those. And yet we're running pretty historic fiscal deficit. Now, one of the things you probably won't hear discussed in the mainstream media is why we are running that historic fiscal deficit. Well, we have to be able to finance this trade deficit, right? We have to come up because our American companies are getting far less income from the rest of the world than we are spending on goods from the rest of the world. Because of that, we have to come up with that difference somehow. And one of the ways that we do is via the fiscal deficit. And so, you can see in this chart, the correlation, at least, it's not perfect one-to-one fit, but there is a very strong correlation between the fiscal deficit and the balance of trade.
That's super interesting to look at, and it makes it so hard to ignore once you see the charts. What's that? Corporate profits now?
Yeah, so I mentioned this system of globalism is really great for some people, and one of the people, one of the groups of people that it's really good for is multinational corporations. They get to outsource to countries with much cheaper labor costs. And so it's very good for their profits and their profit margins. And so here we see the trade balance inverted. So as that purple line is going up, the trade deficit is getting worse, wider. And then we see in white corporate profits. The chart was the correlation was so striking that I threw a correlation coefficient on to indicate just how strong the correlation is. And you can see that in red at the bottom. And it is, following, kind of in the mid 2010s, this correlation is extremely strong. And of course the correlation gets less notable during recessions. But generally speaking, this trade balance, the worse our trade deficit gets, the better our corporate, the biggest of the big corporations, the multinational corporations, the better they do. And so that kind of leads into the next one. And so now we look at the S&P and the trade balance. The S&P here is in orange, and the trade balance, again, inverted, is in purple. And now we start to look at, okay, well, if it's really great for these multinational corporations, that globalization has allowed for much higher profit margins due to much lower labor cost of production. How good is the system for the average American? So here, what I did was throw U.S. wages as a share of GDP. And what this shows is the average hourly wage divided by GDP. And so GDP is the denominator. And what this indicates when I do a lot of these kind of relative charts because I think that they're very helpful in illustrating a trend, a relative trend between two things. So to put it very simply, if the average hourly wage of, the average American, the average amount that they make per hour, if that is growing at the same rate as GDP, this line would just go straight. It'd be horizontal, perfectly straight, horizontal. But instead, what we see is, since 1970, the average hourly wage has actually trailed GDP. And so the U.S. wage as a share of GDP, the average American's wage are not keeping up anywhere close to GDP growth. we like to talk about GDP, another year and, 3.5% GDP growth. Well, what this indicates is that Americans' wages have not even been keeping up with that. In fact, they've been growing slower than GDP has been growing. And then you contrast that with, the S&P 500, and the, you overlay the balance of trade, and you see it's been really good for the S&P 500, multinational corporations, anyone who holds the S&P 500. But of course, one of the things we know is that wealth inequality actually, and this is also never mentioned, but wealth inequality today is even worse than it was in the Gilded Age of America. So we named an entire, decade, era of time after, because of the historic wealth inequality of that time. And wealth inequality today is even worse than that. And we know that, the top 10, top 1% basically own all the assets. So, some people might think, oh, well, everyone can buy the S&P 500. I have a chart for that later, but what this indicates is basically, the disparity between those who work for a living, and their wage growth versus those who invest for a living. And this is an interesting concept of this balance between capital and labor. And of course, a lot of people would think, oh, America's capitalist, so we prioritize capital, which is accurate. But I would argue that it's not always been that way, even in America. And I think we might be starting to see a kind of secular trend change towards more of a populist, pro-labor sort of a world. But clearly, capital has been, very prioritized over labor. And I think that's one way to kind of summarize this chart.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece, and make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin Way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty. That's it's a frustrating thing once you realize that of most people would make more money thinking about what they should do with their resourced capital rather than working 1 hour, like thinking about okay, where should I put my financial energy and what should I do with that financial energy, and how do I allocate that capital most efficiently. This gives especially the wealthy class so much more than they could ever do in 1 hour of work. And that's a flawed system, in my opinion. That's a system that incentivizes sitting on a big stack of capital versus working towards a better society, a better humanity, working towards bigger things. And so I am a big fan of proof of work and what proof of work will do for humanity. And thank you so much for laying it out so amazingly with the charts. I think it makes perfect sense, and I think it's really clear now for people.
Yeah, I totally agree. And you can look at even something like taxes, right? So if you work for a living, what's the tax rate for the average worker, on a getting a salary on a W-2 versus what is the tax rate if you are someone like you mentioned, a wealthy investor that just sits on piles of financial assets. And of course, the capital gains tax is like half of what the income tax rate is for people that work for a living. So that's I think another easy way to get an indication for which which of those two groups is being prioritized by a government or by an economic system. And this goes into specifically the total net worth of the top 1% as a share of GDP, and the average hourly wage as a share of GDP. So they both use GDP as the denominator. So the red line and the purple line, which we had seen on the chart before, this purple line and this red line have the same denominator. The only difference is that the numerator is different. The average hourly wage is the numerator for the purple line, and we know that that's been declining relentlessly for decades. But now we look at the total net worth of the top 1% as the numerator for the red line. And what we see is the trend is the exact opposite. Unfortunately, TradingView didn't have data before 1990 for this. But we can see since 1990, and I would argue globalization really kind of accelerated in the 90s. You can see that the the total net worth of the top 1% divided by GDP, that line is going straight up and to the right. And so what that indicates is that the total net worth of the top 1% is growing faster than GDP. Right. So the top 1% are outperforming GDP, and the average hourly wage is underperforming GDP. So if you just, figure 3% GDP growth, well, the average person's wages are only growing maybe 1%. And then the total net worth, might be growing 5, 6, 7%. And so that's basically what these relative charts can show you. And I think they're really instructive for some of these things, changing the denominator. I always say, the denominator, the US dollar, is fundamentally broken. And, this, I think, denominating things in other metrics can be extremely illustrative of some of these concepts. For example, if you divide the S&P 500 by gold or by M2 money supply or by the Fed balance sheet, it doesn't look nearly as good as the kind of nominal chart that most people see. So I think it's something, if people play around with TradingView or Fred, and they're interested in this stuff, I would encourage people to try out these kind of relative charts because they can illustrate some really striking trends like this one, and it shows too that the top 1%, their net worth is extremely correlated to the trade deficit, and that lines up with the corporate profits that we were looking at earlier and the S&P 500. We both saw a strong correlation with the trade deficit for those, and you see it again here. where, the level of outperformance that the top 1% are performing, the level that they're outperforming GDP, increases as the trade deficit gets worse. Hopefully that makes sense.
And it's a really great point, because I have so many people that are just in ETFs and stocks, and they're like, oh, like I make 5% per year, I make 10% per year, I make 7% per year, and they feel smart. They feel like they're growing. They feel like they are outperforming. And once I sit them down and say, like, okay, like, what is the actual inflation rate? Let's go through it. Like, what do you want in life? Do you want a nice house one day? Do you want to eat in a good restaurant one day? Do you want to take your kids out to those trips and have those experiences? And then they soon realize that their real inflation rate isn't 5% or 4% or 7% or even 10%. If you go out and see what is the inflation rate of a great house at the lake, what is it the inflation rate of eating at great restaurants, not McDonald's, but great restaurants. So like that inflation rate is all of a sudden way higher. And we're looking at like 15, 20, maybe even 30%. Obviously, if you just live in your mom's basement and watch Netflix all day long, you don't worry about inflation. but that's not the life I want to live. So when you realize that, you actually are like, okay, I invest in something where I make 5% more, but actually the inflation rate is, for me, is 30%. So I have to find something that makes 30% to keep up with inflation, to preserve my financial energy. And my salary also has to keep up 30% every year to keep up with what I currently have. And then I also want to get better in my life. So it's a mind shift that people have to do, of like, are you really getting richer if you invest in an ETF that gives you 7% a year? No.
Yeah, exactly. Exactly. The hurdle rate is so much higher than people realize. I'm a big fan of Jeff Booth, and he talks about the kind of deflationary forces of technology, right? So it's not that 0% is our baseline. It's actually, we should be seeing deflation on the order of 4 or 5% per year due to technological advancements. And then you add on that the actual consumer price inflation to that baseline, to the baseline of negative 4 or 5%. And it's very similar to the growth, the compounded annual growth rate of the money supply, which is around 8%. And so the hurdle rate for people is actually much higher than they realize. And of course, Bitcoin is one of the only assets that has outperformed the hurdle rate. You can use any denominator you want on Bitcoin, and it has outperformed. I'd point out, I'm a younger millennial, and I've worked my butt off for 15, 16 years in the particular industry I work in. I'm looking around, and I'd point out, a couple of years ago, I kind of finally got to, good salary, and I'm a director at this company, and I thought, okay, I've done it, I've made it. And this was in 2020, and then COVID came, right? And they printed all this money, asset inflation went through the roof, and I started looking around and going, what is going on? And that's really what led me into markets, economics and finance and all this, was like, I went one day being able to afford, a modest little house in a suburb of LA, to now, wait, I have to triple my salary? And I couldn't understand what was happening to me. Because I make a pretty good salary, right? I'm a director. There's not really much higher I can go. And yet I have to triple my salary to qualify for a mortgage on a 60, 70-year-old house. with 2-bedroom, 2-bath, small little thing. Like, what happened there? And so that was really kind of what led me into looking into all this stuff. Was, I think a lot of people have felt what you just described, that phenomenon, and I think a lot of people are hungry for answers. I think a lot of people are want to understand, and they might not want to know as badly as I did. I have probably devoted 20, 30,000 hours, maybe even more, honestly, to this world of macroeconomics and markets. But most people, they don't want to find out that badly. So what I try to do is distill everything down to a bite-sized chunk, where people can understand, because some of this stuff is complicated, and so my goal is always to help the average person, because the average person is hurting. The people I know in real life are hurting badly, and I think that the first step is understanding what the problem is, and once you understand what the problem is, the solution, especially now that we have Bitcoin, is so straightforward.
Yeah, it's so messed up, honestly. You have to now in that world be an investor, macroeconomics. You have to do all those things, and maybe you just want to be a doctor and save lives. Maybe you just want to be creating an app. Maybe you just want to do a YouTube channel. Then it in itself is already a lot of work. So like, you don't want to be a financial portfolio manager on the side and analyzing charts and looking at all those things. In a perfect world, my channel would be irrelevant. Like all the things that we are talking about, in a perfect world, nobody would have to talk about that. It shouldn't.
Yeah.
We shouldn't have to do those educational things, because we just have Bitcoin, and we just have good money, and we can focus on providing value for other people. I put out something like 1 or 2 days ago on Twitter, and I'm arguing with people around trading, and I'm saying trading is not good. You might make some money with it, but you're not adding any value. So think about things where you can add value to society and to humanity, and not where you can make money. And I think if it's a more philosophical thing now, but like this figure out where you save your financial energy, and Bitcoin is so obvious once you understand it, and then just figure out where you can add value. And I realized currently, right now, I can actually add the most value to humanity, I think, of like making people understand why they should be in Bitcoin in the first place. But Bitcoin should not, we shouldn't talk about Bitcoin all day long. I do that now because it's necessary, but it's actually not good. I think it would be better if I have a podcast on like how to like do AI stuff, or like what 100 other things that you couldn't talk about. It's really hard because I do so much Bitcoin. It's like almost nothing else in my life now. But like that's where we actually should go.
Yeah, no, I agree. This next chart, kind of shows what we were talking about, that hurdle rate, and just how badly, the average worker in America has been performing. This chart actually goes back further. This chart goes back before the end of the gold standard. And you can see, versus gold, versus M2 money supply and versus GDP, we've already kind of seen that general trend line. But, versus gold, of course, Bitcoin wasn't around in the 70s, so it's the best kind of proxy to look at, in real terms. Look at that precipitous drop for the average worker in gold terms in the early to mid 70s. It's striking. And so this just is kind of another way to illustrate some of the concepts we were talking about before. But what I would say is, what's happened is that we have a hyper-financialized economy as a direct result of being the reserve currency, and globalization and kind of the U.S. running this huge trade deficit. Basically, the way that system works, we don't make anything, so we need to buy it from China. Well, we don't generate enough income within our country to pay for all that stuff. So how do we come up with the dollars to send to China? We put our youth into kind of inescapable, insurmountable debt via the fiscal deficit, right? And just gross federal debt. That's one way that we raise cash, get those dollars, ship them out to China so that China can send us, the stuff they make. And China then takes a good amount of that money. It depends on the era, and it depends on a bunch of economic variables. But in general, you can kind of think of it as about 50-50. About half of those dollars that we send to China, this is a very rough kind of rule of thumb, but about half of them China stores as foreign exchange reserves. And then the other half get recycled into US dollar assets. And so what the dollar's reserve currency status has really done is it's turned the dollar into a funding currency, right? If you are a foreigner, dollar denominated assets, they not only perform very well, just in US dollar terms, but remember, like you mentioned in the very beginning, most currencies have been falling or weakening versus the dollar for decades. So not only are you getting that appreciation in dollar terms, but versus your local currency, any dollar denominated assets you hold are going up even further. And so I think that concept is super important because, as the trade deficit gets worse, what is happening is that even more money is flowing into our capital markets. And so this is part of why we see such historic overvaluation in financial assets and historic wealth inequality is just the structure of the system. If the current account of a country must balance, like if you are running a very large trade deficit, that means that it is balanced by an equal amount. Say you're running $1 trillion trade deficit. What that means, just on a very simple accounting basis, is that $1 trillion of capital is flowing into your capital and financial account. And this is kind of very rarely talked about. You won't hear this discussed, certainly in the mainstream media. Mike Green talks about it sometimes. I know he's not a fan of Bitcoin, but I think he it's important to listen to people like this, and take things on a per issue, go issue by issue, and be objective, and hear people out, because Mike Green, I think, does have a lot of really interesting things to say. And of course, Luke Groman talks about this. But basically what has happened is, as our trade deficit has gotten worse, what that means is that the amount of money flowing into our capital and financial account from the rest of the world has gotten greater. And so that's why assets have this kind of second leg, is as the trade deficit has really blown out in the past 2 decades. That's why assets have gone so vertical. It's just a mechanical design of the system of being the reserve currency issuer. Everyone wants dollar denominated assets. Because you're earning not just the S&P 500. Of course, the S&P 500 goes up most years, so that's great. You're making money there, and then you're also making money in that asset, because the dollar is appreciating versus your local currency. So you're making even more money. And this is what's led to the historic wealth inequality that we see today. And I thought, this is a kind of interesting way to look at it. The average hourly wage divided by GDP versus the S&P 500 divided by GDP. So same denominator, constant denominator. And we see that the S&P 500 has grossly outperformed GDP. Of course, following 2000, the dot-com bubble, and then again in 2008, there was that period where it fell pretty sharply. The S&P 500 underperformed GDP. But zooming way out, since 1970, the S&P 500 has vastly outperformed GDP. Meanwhile, the average worker, the average American, the 99%, their wages have vastly underperformed GDP. And I think this, you could overlay the wealth inequality chart that a lot of people, the jaw chart, and you can see it happen. This is what is causing that, and the trade deficit and the dollar's reserve currency status, just due to the mechanical structural nature of the system, that's what's causing this.
Sorry, I just want to add one small thing. It's so frustrating then when central banks, and especially the ECB, come along and say Bitcoin is causing wealth inequality. It's so frustrating when they make those arguments, and then real people actually repeat those without knowing better. It's a frustrating thing because the central banks are the ones that are causing that, and it's so clear when you presented it with those charts. And Bitcoin is not the cause, but the solution to the cause of the central banks.
Yeah, I actually read that ECB paper, and I couldn't disagree more with them. Of course, there are winners and losers in any economic system, but it's a reflection of the system way more so than it is a reflection of Bitcoin. Bitcoin is just a neutral, scarce asset, right? Bitcoin doesn't have a board of directors or a president or political opinions. Bitcoin is just a protocol, and so really, what if Bitcoin goes, well, I would say when Bitcoin goes to $2, $3, $5, $10 million per Bitcoin, there will certainly be winners, but that's not a reflection of Bitcoin. That's a reflection of the underlying system and the inflation in that system to deal with the debt, which is kind of a whole other thing. I've done a lot of work on the fiscal, the debt and deficit and financial repression and the debt, but for the purposes of this discussion, I think it's very timely because I've been talking about Triffin's dilemma and globalization, the dollar's reserve currency status, and the actual second and third order effects. It's been as July of 2024 was really when I kind of saw, realized what was going on, and thought, oh my God, I have to scream this from the rooftops. But in the mainstream, you're starting to hear a lot of this stuff talked about, recently, and it's encouraging for me. It means I was on the right track. But you're hearing the term Triffin's dilemma much more nowadays, and a global monetary reordering, like a Mar-a-Lago Accord, is kind of the name people use to describe that. You're hearing that a lot recently these days, and I think that Bitcoin probably will play an important role in that. This is just another way to kind of look at the concept we were talking about before. You divide the S&P 500 by the average hourly wage, and what that shows you is how many hours at the average job would the average person need to work to buy one share of the S&P 500. And you could see here in the 70s, it was like 15, 20. That number now is 195. So the stock market has grown 650% faster than the average hourly wage since 1971.
That is amazing. I mean, that's not amazing, but it's amazingly sad.
Yeah, and what's happened is just due to the structure of the system, this hyper-financialization that I mentioned before, what this, what this means in effect. Here's a chart that shows tax receipts for the federal government, how much income revenue is the government making, and then it shows S&P 500. And you can see that, and I have a very in-depth post on this, the tax foundation themselves basically say that like capital gains tax drives the performance of the S&P 500 and the performance of the stock market drives tax revenue for the federal government. And maybe we should have a system where it doesn't have such an outsized impact. But you can clearly see here, anytime there's a decline in the S&P 500, tax receipts or revenue for the government fall pretty dramatically. And so this goes into a kind of concept I have that, essentially assets can and will only go up and to the right because the government needs them to. And unfortunately, that's not a healthy system. That's not a system I like, because that includes housing, and I want to buy a house and I want to start a family and raise a child, and have that kind of life that my parents did. So it's depressing to say, but just objectively, the more data you look through, the more you realize, okay, well, if the American economy is hyper-financialized and utterly and totally dependent on financial assets constantly going up and to the right, well, that is probably what's going to continue to happen just because that's what they need to have happen. And so this is just another way to kind of illustrate this hyper-financialization that has occurred as a direct result of the dollar being fiat currency, of course, number one, and number two, the dollar's role as a global reserve currency. And I think this is just another good way to illustrate that hyper-financialization.
True.
And this gets into kind of what I had started to mention there. This shows in white the trade weighted dollar index. And so the dollar metric that most people know is the DXY, and that's useful, and I do use it. But that DXY calculation isn't altered based on how much trade we do with each one of the countries. The euro is like 45% of the DXY. And so the DXY is, in my opinion, not as good of a measure to see the dollar's true performance. And the trade weighted dollar, I think, is a much better way to look at the strength of the dollar. And we see that here in white, going back to the early 2000s. And then in red, we see manufacturing employees as a share of total full-time workers. And of course, this, if you were to go back to the 80s or the 70s, this chart, this red line would look exactly like the average hourly wage line that we were looking at before. It's just straight down the entire time. And this is a direct result of outsourcing our jobs and globalization, and creating a system where we basically put our youth into ever inescapable debt to get dollars so that we can send to the rest of the world, China mainly, and have those dollars then recycled into our capital markets so that, to pump the value, pump the wealth of the wealthiest top 1% of the country. I mean, when you put it that way, I think most people would agree that's a pretty broken system, especially when the average hourly wage has been relentlessly declining as divide by M2, divided by GDP. The average worker has been getting totally screwed. If the average worker had been, doing okay, I think, there would be less anger and you wouldn't see the kind of populism and ideological divisions that polarization that we've seen. I don't think any of that would be occurring if the average American had been, keeping up, like you said before. I don't think any of that would be happening. This doesn't show the wage. It just shows, how out of all the full-time workers, how many of them are manufacturing employees. And, like I said, going back to the 70s, this chart just goes down the entire time. And this is a result of what we get when, a company can make something for 1/7 the cost in China. And, it's great for the company. Their profit margin increases, right? But when it comes to kind of the average middle class, working class person in America, sure, they benefit from, I would argue in some ways, there are benefits to this. I don't want to be 100%, black or white on this issue. We as Americans do get the benefit of low cost goods. That is certainly one benefit. But I think hopefully, when you look in the totality of the situation, I know I would much rather give up a $20 Amazon speaker, right? A Bluetooth speaker made in China. I would much rather give that up and have a solid a wage that keeps up with GDP growth and keeps up with inflation, where I can make enough money to afford a modest little single family home. Like, I would much prefer that to being able to buy a bunch of cheap plastic stuff on Amazon. And I think most people are getting to that point too.
And it's quality over everything. Like, quality is so important. That might sound weird for someone that does a podcast every day, but I also do think that quality is the most important thing. And sometimes you have the quantity bringing quality, like if you have repetition and training and art forms and sports and stuff like that. But in terms of like that topic, I think like quality is the most important of them all.
Yeah, I totally agree. Like I would give up the cheap Amazon stuff in an instant if it meant that you could build wealth by providing value to the country, helping America and providing more value to American people. But currently, really, the way you get ahead in America is owning financial assets. And I think that's a fundamentally broken system. And this chart kind of illustrates the disparity between how much investment do foreign countries have in U.S. dollar denominated assets versus how much does America own of foreign assets, whether that be foreign exchange reserves, currencies, or foreign denominated assets denominated in other currencies. How much has America invested in the rest of the world versus how much has the rest of the world invested in America? And like Luke Gromen talks about the net international investment position. You might have heard that phrase. That is basically what this is showing. It's just a different way. With this, you're able to see each line independently. But that's basically this concept. And you could see here in white, the foreigners own about $32 trillion, according to the Fed, of US dollar denominated assets. And meanwhile, America only owns about 17 trillion. And you see, it might be a little hard to make out, but you can see that those jaws are following 2019, in the recent kind of era, post-COVID, COVID and post-COVID, that trend is accelerating notably. And that corresponds to the trade deficit blowing out over the past couple of years. And so again, I just go back to this is a fundamentally broken system, and tariffs, sure, they might be one way to try to tinker around the edge and get some marginal improvement in the trade balance. But, really at the end of the day, the dollar being the reserve currency of the world is the problem. And we can tinker around the edges with tariffs which I think is good, and I do support tariffs, and I think they're much needed because trade is incredibly unfair. But unless we can tariff all we want until we address the dollar's reserve status, nothing really meaningfully changes on a fundamental basis. And what this chart basically shows is tariffs in the first round of Trump's administration. And so people might have to zoom in or if they're on their phone, but I put, little description of what was announced during that time period. And what this white line shows is the Chinese yuan versus the US dollar. So that currency pair. And you can see that from the minute that tariffs were first announced, they weren't even put into effect. The Chinese yuan started to weaken versus the dollar. And that trend continued until basically COVID, when it the yuan started to kind of rally versus the dollar. But a lot of people misunderstand this particular aspect, and it plays into what kind of the globalization and the dollar's reserve status and Triffin's dilemma. And I think it's important. An important part of the solution is tariffs, and you can see here in the lower pane the CPI year over year change, which is the quote unquote inflation metric that most people know. And you can see that during that round of tariffs, inflation was actually below 2%. If you ask the Fed, inflation was not high enough during that entire era of tariffs against China. So tariffs are not inherently inflationary if these other currencies weaken versus the dollar, right? If the dollar is getting stronger for fundamental reasons, then and these other currencies are getting weaker, that can completely offset any inflationary cost for Americans. Just as a very simple example, if we put a 10% tariff on Mexico, say they have, they probably have 10% tariffs on our stuff. But say, we do a reciprocal tariff of 10% for all Mexican goods, but then the peso falls 10% versus the US dollar. Americans don't pay any more for an avocado. The currency channel completely offset any inflationary impact from that tariff. And I think it's an important part of the solution. So I wanted to mention this, tariffs, and we are clearly going into a world of deglobalization, and a move away or a move toward a multipolar world, which I think gets into the solution, which is Bitcoin.
And I couldn't agree more. And yeah, tariffs are like a good thing. But as you said, like the real problem is the money, not missing tariffs. That's the real thing. We are already like 70 minutes in, so that's the time flew by very quickly today. I guess we will make a second part on this and dive deeper also on Bitcoin, because we really describe now in like 70 minutes what the problem is, what's the cause also of the problem. And this is amazing to see. I think it's an eye opener for a lot. And it's also good for even the people like me that are already aware of the problem, to having that concise in like one video. I think that's really great. So thank you so much already for doing that and bringing that to our podcast. And maybe we can focus on the second part that we do in like half a year or something like that. More on Bitcoin and the things of that. But is there something you want to talk about on Bitcoin specifically without diving too deep? Because otherwise I think we're going 2-3 hours.
Yeah, sure, of course. I mean, the solution is pretty simple. That's the cool part is the, Bitcoin being the solution. This part is the easy part. What we need is, if the dollar reserve status, right, and the dollar is the problem, the solution is something that is neutral and that freely floats in all currencies. And, before Bitcoin, of course, this was gold. And during the mercantilist era, from the 1300s onward, this was how it worked. If a country was producing more value for the rest of the world than they were consuming, the gold would flow into that country, right? Very similar to a Bitcoiner, right? If you're producing more value for the world than you're consuming Bitcoin, you can accumulate Bitcoin and grow your Bitcoin. It should really be no different for countries. The entire thing is broken due to the dollar's reserve status. But at the end of the day, that is how a fair and free international trade system works. Is, countries are incentivized to produce more value for the rest of the world than they consume, gold or Bitcoin, a neutral asset, flows into the country, and that country stack gets bigger and their currency gets stronger, right? They are in a stronger economic position. Their currency is stronger. And really, it's that simple. That's the cool part, Mar-a-Lago Accord, I think, has to have some kind of wonky, nerdy stuff attached. But at the end of the day, like the yuan is way too weak versus the dollar on a fundamental balance of payments basis, as one of many things they have to address. But generally speaking, the solution is very, very simple. Which is, a move away from the dollar being and dollar-denominated assets being the reserve asset for the world, and a move towards gold and Bitcoin. Either both gold and Bitcoin have all the properties that are needed to serve as a global reserve asset. I just personally believe, and I know a lot of Bitcoiners believe, Bitcoin. You go down that list of properties, and Bitcoin is just objectively better than gold in every single one of them. So the solution is quite simple, and luckily we have Bitcoin as individuals. And I think that, over the next few years, maybe the next decade, countries will start to be grateful for having Bitcoin.
That's very true. And we already see that happening, right? The countries already start doing the things and already start exploring the Bitcoin option in that way.
Yep. And I think that'll continue as these, I'm a big fan of like structural demographic theory, like Peter Turchin and Neil Howe and those guys. And they talk in these, 60, 70 year cycles, these kind of longer lifetime cycles of 60, 70, 80 years. And, what we've seen over the past 60, 70, 80 years is increasing globalization. And I think that, much like we're going to see higher interest rates for the next 50 years, I think that we will see less globalization over the next 50 years. I think that countries will start focusing on their own people who have been ignored for far too long, as all of our graphs show. And I think that we will, it's not just a flash in the pan. It feels like this is going to stick. And like you mentioned, it's not just America kind of going this direction. This is also happening in the rest of the world too, like throughout Europe. So I think that it's interesting times to live in. I think that it's a very lucrative time to live in, given what Bitcoin represents and the properties of Bitcoin. I think it's going to be very lucrative for those that hold Bitcoin. But generally speaking, I think it's going to be extremely positive for the average American who has been working their butt off, trying to just survive and keep up with this ever increasing hurdle rate, due to debasement and asset inflation. And, that average guy who is drowning is going to, hopefully we are able to construct a better system and make modifications where they need to be made and help that guy for once, because, the average dude has not been getting helped, as all the first couple charts show. And I think it's time that, the average American that works for a living sees some benefit from, right? Like, America's so great and it's the strongest economy in the world. Well, you look at average hourly wage versus GDP, it's not the average American is not seeing any of that strength, right? So I think it's time, to try to rebuild a better system, and prioritize that average guy, who make up 90 something percent of the country. I think it's critically important, because if we do not, sure, the current system can continue, but eventually we get to a point where Marie Antoinette scenes are playing out on the streets of Manhattan and Los Angeles and San Francisco and Washington, D.C. And I don't want that. I don't think any of us want that. I think we want to build something better peacefully. And I think it is possible. And Bitcoin, thank God for Bitcoin, because gold certainly has some pretty notable flaws, that make Bitcoin a much better alternative for this trend change.
Really cool. And man, it's been an amazing podcast. We have one question that I have one question that I asked each and every one of my guests, and the question is, what can we learn from you besides Bitcoin?
Oh boy. Well, the industry that I've worked in, the healthcare industry. So my day job, I've worked in behavioral health. And so that's part of the reason, I think, that I gravitate in the very first couple of charts to overdose deaths and suicides, is that's kind of the industry I've worked in for the past 15 years. And yeah, I would say, I would just offer, if anyone is struggling with mental health issues or drug addiction issues, feel free to reach out to me on Twitter. I'd be more than happy to try to give my wisdom and my experience with that. And unfortunately, that is an ever-growing segment of the population. So I would just make that offer. I've been doing it for 16 years, and I know it's troubling a lot of people. I know a lot of people are hurting. And so, yeah, just shoot me a DM and we can talk. I can hopefully help your situation. If nothing else, sometimes just listening to someone can be helpful. So that's what I would say.
Really cool. And as always, I usually ask that later, but we can do it now. As always, I do your link to Twitter in the description, so people can find it easily and don't have to search on Twitter for half an hour to get to your Twitter. So if they want to reach out to you, they can just go on the description, or if you're already on Twitter, you can see the tagged account above. But usually it's in the description, and just reach out to him. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, how do you feel about physical fiat cash?
I think a small amount is helpful. There are some situations where physical fiat cash could be beneficial. If there was some kind of issue with the power or the internet, and we live in an increasingly digital age, at least in the early stage, fiat cash would actually be, quite helpful to have some of that on hand. I would say, physical anything, right, like matters in that kind of world. Even physical silver and physical gold, anything that people agree has value in a physical form is super important if the power goes out or the internet goes out, like a cyber attack or something like that.
Interesting. Yeah, that's physical cash, and maybe even like small gold coins, like smaller ones. And it was like a survival kit of the worst thing is happening currently.
I'm a bit of a prepper. Yeah.
I think it's not bad. Like, I think it's good, actually. I actually do have physical gold also. in here, like a very small amount, but something that is probably not even getting me through a week, but maybe through a few days. So that's something, but I don't have it because of that. Actually, I have it because of emotional reasons. So that's just something that I hold on to because I want to remember something. But it is an interesting point of like, okay, what do you do if like right now, overnight, everything falls down? Like, how much physical cash do you have, and how much gold do you have in your basement? Maybe you want to prepare a little bit and allocate like 1-2% of your.
That's what I would say. Yeah,
like something.
yeah, 1,
Something
2, 3%. Yeah, not a lot. Not not a lot, because it's a melting ice cube. Otherwise,
it's a melting ice cube for a situation that probably never happens.
Yeah, exactly.
Really cool. Thank you. It was an honor to have you on. I think you brought some really good wisdom and a lot of great charts and numbers here. And I think it was eye-opening for a lot of people. We already mentioned that we can find you on Twitter. So thank you so much for being on, for being such a great guest here today. And yeah, also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.